This is your Monex Metals Market Update with Mike Maroney.
Good afternoon. It's Monday, November 20th. My name is Mike Maroney, and I am coming to you today from the Monex Precious Metals Studio. Let's do our week in preview. First of all, before we start talking about the financial markets, I'd like to wish everyone a very happy Thanksgiving. And hopefully everybody will have a wonderful time visiting with family and friends. Now, let's talk about what's happening in the market. Last week, we had some severe volatility, and the interesting thing leading up to Friday's spike to the upside was silver and gold were both trading in an extraordinarily tight range. Gold was trading between 1264 and 1284, which is basically defined by the 100 and the 200-day moving average. In the silver market, silver was trading between 1678 and approximately 1707, 1709, also trading within key moving averages. But what happened on Friday is we saw a break to the downside in the US dollar. The dollar had popped all the way up to 95.15, and most of the currency experts were talking about the fact that the dollar was headed to 97 and potentially much higher. And when the dollar rallies, since silver and gold sometimes act as an inverse relationship product, then it's not unusual for gold and silver to sell off a little bit. But the volatility being created by a few events that people are trying to figure out the outcome to has caused the market to bang back and forth, back and forth. And the craziest thing about it is it's happening almost on a daily basis. One good up day, next day down. One good up day, next day down. And we didn't break out of any of those ranges that I first described. But what happened on Friday when the US dollar broke under the 100-day moving average on a weekly close, which is considered a very major event, what we saw was a major short covering move in both gold and silver. Gold rallied all the way up to and made a multi-week high of 1296. And silver rallied through key resistance right at that 1707, then took out 1717, and lo and behold, we hit a high of 1737. Interestingly enough, today we opened in gold right around 1292, but before you knew it, gold was down 20. In the silver market, we were as high as 1731, 1735 overnight. Lo and behold, here we are right back down around 1684, 1685. So both gold and silver now, after breaking through the 100-day moving average and taking out key Fibonacci resistance points, it's given it all back as the dollar has bounced back up above 94. Now, what is causing this action? First of all, there was a lot of safe haven buying on Friday, which caused the shorts, which have been very comfortable as long as gold was below that 84 area and silver was below that 1707 area, to continue to hold on to those shorts. But once we broke above there, suddenly you saw a lot of velocity, a lot of volume, and lo and behold, we hit a higher price very quickly. Now, the interesting thing about a short covering rally is it typically doesn't maintain a solid base from which the market can go higher. What you need to see in order for the market to continue to go higher is a solid base based on new long-term buyers, people who are buying it and plan on holding it. The short-term trading activity that we've seen over the last 3 weeks is basically taking place because day traders are getting in and out of the market looking for small bits of profit, but looking to do that on a daily basis. So now what do we need to see happen? First of all, gold needs to continue to develop its base above that 1260 to 1264 area, which is defined by the 400-day moving average. And silver needs to hold above 1678, 1672. These are the numbers that are considered absolutely key, and they're known as downside pivot points. If these pivot points were potentially taken out, then gold could go down somewhere in the 1200 to 1235 range. And where could silver end up? Somewhere in that 1585 to 1625 range. And if we were fortunate enough to see a price level down in that general vicinity, what that could create is a tremendous long-term buying opportunity for which people who are looking to own gold, accumulate it for safety, take delivery of it, could feel very comfortable with, because now you're getting close to what we call equilibrium, and that's the approximate price at which it costs to take these metals out of the ground. Now, on the flip side, if silver were to break above 1760, and if gold was to break above 1307, it would mean that we now have gold and silver moving back into a accumulation phase. And that's where you're seeing buyers buy it, to hold it, and to accumulate it for the longer term. And once we see that signal, that will be extraordinarily positive. What do we have to watch this week? We obviously have to watch what happens as far as the U.S. tax bill is concerned. Will President Trump be able to get this through the Senate? And if he does, what will it mean to the stock market? Will the stock market start to analyze the reality of this new bill and potentially put in a top and start to roll over? And will this also cause the Federal Reserve to feel comfortable enough to potentially raise interest rates in December? Now, these are a lot of variables that we have to watch, and that's what we do here at Monex. We study the markets. We only trade 4 products: gold, silver, platinum, and palladium, and we're very knowledgeable about certain features and certain fundamentals that dictate price movement. So if you're interested in owning gold, if you're interested in trading gold, if you're interested in owning silver or trading silver or even platinum or palladium, give us a call so we can explain to you the ins and outs of how you can either 1, purchase it and take delivery, or 2, develop trading strategies. We'd be glad to help you out. Even if you're looking at doing it somewhere else, give us a call first, because I have a feeling once you see the knowledgeable response and information that we can share with you, you'll feel very comfortable doing business with us. Thank you, and give us a call today.